Hello and welcome everybody to today's very special training. Just a very quick check-in before we get started. You can hear me okay and you can also see the presentation. Fantastic. Okay, so just a quick disclaimer to have a read through and then we will get started with today's training. Hello and welcome everybody to today's very special webinar, how to profit and take advantage of the biggest commodity trading opportunities right now, presented by myself, Phil Carr, at the Gold and Silver Club. The live session will be covering live market analysis, a watch list of trading opportunities, a forecast of where gold, silver, oil prices are heading, answering questions, and of course, we will be providing live support. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website at www.thegoldandsilverclub.com. So we'll get straight into it for today's training. So why commodities and why now? What are the opportunities in these markets at the moment? Commodities have become the must-have asset class in every portfolio. In 2016, commodities outperformed equities, bonds, and all major currencies to close the year with a higher than average rate of return. That momentum has continued right into 2017. If you missed out on the first leg of the current bull run in commodities, you have essentially been gifted with a second chance. The bull run here is just getting started. It's about to enter a very lucrative second stage of the bull market in 2017. We've seen markets like palladium so far up over 15% this year. We've seen platinum up over 9%, gold up over 5%. We've seen silver up over 7%. And if you have been waiting on the sidelines, getting ready for the next best opportunity right now is a fantastic time to be on today's session and just get this information. So we'll provide you with information as to what commodities, how they performed last year, and also what we're expecting into this year as well, and the best trading opportunities. Now, traders and investors can't seem to get enough of commodities. Bullish demand for commodities is at its highest level since 2009. Most commodities have outperformed equities, bonds, all major currencies. In 2016, with impressive double-digit gains. We've seen strong gains on silver, soybeans, sugar, heating oil, Brent crude oil, zinc, US crude oil, natural gas, gold, coffee, palladium, aluminium, nickel, copper, corn, cotton, and also wheat. Now, more money has poured into the commodities markets in 2016 than any other asset class. Demand for commodities is at the strongest it's been in the financial crisis, since the financial crisis in 2016. Over 1 billion has poured into commodities, whilst investors have pulled out more than 8 trillion from high-risk markets such as equities and Forex. And we saw that last year. It was visible with the breakouts that we saw in gold, on silver, just after Brexit, the huge moves that we saw, silver up over 45%, gold up over 30%. We've seen big inflows into these markets, and it's continued into 2017. Demand for commodities remains at record highs now. Data that tracks the movement of money around the global market shows that traders continue to hold bullish positions across 20 commodities at levels not seen since 2010. Now, going into 2017, we've seen strong expectations that commodities will continue to generate significant returns throughout this year. And that has been evident with the rally that we've already seen in gold, following on from the lows of December, where it's essentially rallied over 900 points to the upside. We've also seen strong moves on platinum, on palladium, on silver, on sugar, on coffee. So it's been a very strong start to the year. Here's a closer look at how the commodity markets have performed in 2016 and really what to expect next. So precious metals last year, gold and silver climbed up over 32% and 40% in 2016. Net long positions in gold reached the highest levels on record since 2005. We also saw base metals, so base metal prices rallied over 60% to the highest level since 2007. And of course, more recently, we've seen industrial metals such as copper, also palladium, gain significantly. In fact, aluminium this week had a huge breakout as well. And part of the reason for that has been down to the commitment from Donald Trump to spend over $500 billion in infrastructure redevelopment in America, which has caused significant moves to the upside on industrial metals. You don't want to miss out on these opportunities. We're bound to get more upside in these markets in the coming months. Now, oil prices also increased significantly last year, over 100% gain from January to December 2016. Brent and WTI crude oil surged over 100% from their lows to the highs. Natural gas broke out over 40% to two-year highs, significant moves, and also soft commodities. Cocoa, coffee, cotton, sugar prices increased over 50% over 2016. Most notably, cocoa prices priced in the pound broke out to 39-year highs last year. So you get the idea that it's the start of a new long-term bull cycle here, the switch of capital out of equities into commodities, which signals the start of a new long-term bull cycle. Now, back in the 1980s, when the cycle last switched, commodities returned a staggering 300% return over a 10-year period. And the current levels of bullish sentiment and record demand for commodities indicates we might be on the cusp of a similar switch right now that could potentially last for the next 10 years. Now, a market that you want to bear in mind is the commodity index, which essentially tracks all major commodities. And the last time we saw this switch, we saw over a 300% return over a 10-year period as measured by the Goldman Sachs Commodity Index. Now, where are we at the moment with the current cycle? So far, we can see commodities are primed for an explosive rally. In fact, 2016 was the year, over the last 5 years, was the first year that we've actually seen this switch, and the commodity index produced a positive return on the year. And so far this year, we've certainly seen more upside in 2017 with big inflows over the course of January, with the January effect, of course, which a lot of you will be aware of who follow our webinars. Commodities are now right at the bottom of the cycle. Now, in terms of the bear market commodities have been in over the last 5 years, it is one of the most significant, in fact, the second most significant bear market on record for commodities, both in terms of amount of time that we've been in a bear market and also the significant downturn that we've had. So the impact to a lot of metals over a lot of markets, a lot of commodity markets over the last 5 years, where they've broken down significantly. And what you tend to find is the bigger the bear market, the bigger the subsequent bull market and the rally and snapback in price that we see as well. Commodities are now at the bottom of the cycle, where inevitably they're setting the stage for an explosive bull run over the long term. A move from the bottom of the cycle back up to the high of the cycle would represent a 700% return. You have to remember, we are coming out of a very significant bear market for commodities, and the snapback in price is likely to be just as significant. So it sets up for some great trading opportunities. Other factors that support the case for commodities in 2017, well, of course, we have falling interest rates. Investors are earning less and less on their savings in the banks. The global currency devaluation, the British pound, for example, recently broke down to 31-year lows. The pound has lost 10% of its value since Brexit. It's forecast to fall another 15% in 2017. We've seen extreme bouts of volatility in the global equity and currency markets, upcoming European elections as well, and Brexit uncertainty, not to mention Donald Trump as well, who's certainly causing uncertainty and volatility in the markets. So where is the smart money moving at the moment? Well, of course, the smart money is moving into commodities, and you do definitely want to take advantage of what is to come this year in 2017. So here is the breakdown of the most lucrative trading opportunities for the year ahead, and then we'll go through the charts, we'll go through some analysis. As always, if there are any questions, any comments throughout the session, please do post those into the chat. The most lucrative trading opportunities for ahead that you just cannot miss include the following. So, of course, last Friday, Trump took office, and with that we certainly saw volatility. We saw the US dollar sell off, gold broke out, and gold just this week, actually yesterday, it was the highest close on gold in 2 months. So we saw a significant rally back up towards resistance at 1,218 US dollars per ounce for gold. Gold's broken out to 2-month highs, and we saw gold rally right into the close on Friday. We have the first FOMC meeting of the year, the end of January, beginning of February, which is likely to cause more volatility. Donald Trump, any breaking news regarding Donald Trump is likely to cause additional market volatility, which there have been a lot of. We were on a Reuters session this morning, a panel with Reuters, where we were discussing the impact of Donald Trump. And one of the points that you want to look out for this year, for those of you who utilize Twitter, might be an idea just to follow Donald Trump on Twitter, because a lot of the breaking news items which come out via Twitter can definitely have an impact on the markets, especially Donald Trump's tweets. So certainly that is causing market volatility, and it's just something to bear in mind this year, the overall impact that Donald Trump is having in the markets right now. Certainly we saw explosive moves in industrial metals. Aluminium, copper, and palladium have all broken out since Friday. To give you an idea, palladium in the first 3.5 weeks of this year is now up just under 18%. 18% in 3.5 weeks. We've seen a huge move on industrial metals so far in 2017. That's something which is probably likely to continue for several months to come here. So it's definitely worth having on your radar. And of course, you can trade palladium via binary.com. In March, we've got the Dutch elections. We have another FOMC meeting and UK triggering Article 50. Brexit begins, which again will cause more volatility, more opportunity in the financial markets. In April, we have the French elections. We have another ECB meeting. In May, we have an OPEC meeting, which of course can have significant impact on oil. In June, we have an FOMC meeting, an ECB meeting. In July, Fed Chair Janet Yellen is delivering her semi-annual testimony. In August, we have the German elections. In September, we have another FOMC meeting in October as well. The FOMC meetings over September, October, November, and December can be the biggest news items over those months. They can cause the US dollar to move significantly, and also a number of other commodities which are inversely correlated to the US dollar. In November, Fed Chair Janet Yellen's semi-annual testimony, and in December, we have another OPEC meeting, and then the final FOMC meeting of the year. So if you do have a trading journal, if you're taking notes at the moment, just be aware of these major trading opportunities throughout this year. Now, for those of you who've been following the Gold and Silver Club for a while, that you follow us, whether that's on our YouTube channel, our weekly reports, our website, or on Binary, the Commodities Corner that we do each week, we'll be breaking this down for you every week in terms of the sort of trading opportunities. But of course, if you'd like to be kept updated day to day on trade setups, on opportunities, entry, exit, take profit targets, by all means, make sure that you stay on to the end of today's session, and we'll provide full details of how you can actually make an application and become a member of the Gold and Silver Club. So what we'll do, we'll move over to the charts. We'll break it down for you, and I'll just talk you through what we're looking at in the markets right now. We'll be going through 2 types of trade. So first of all, we'll be having a look at the higher type of trade and also lower. If you select higher, you win the payout if the market exit price is strictly higher than the entry price. If you select lower, you win the payout if the market exit price is strictly lower than the entry price. Okay, so it's a very straightforward way to take advantage of the market. So what we are looking at with this type of trade, essentially we need to get the following right. We want our timing to be right in the market. We also want to make sure that we're getting the duration right, and also we want to capitalize on the particular direction of the market. So for example, if we're looking for a buying opportunity, we want to pick our entry right. obviously the direction would be up, and then we want to pick the timing of which we would be out of that trade, whether that's 24 hours, a week, or just a few hours. Also on the sell side, if we're looking to take advantage of a market that is breaking down, very simply, we would trade for the price to be lower, and we win the payout if the market exit price is strictly lower than the entry price over a given time frame. So that's the best way to really make the most of utilizing Binary.com. So with that said, we'll move over to technical analysis. We'll go over to the charts, and we'll talk you through some of the trading opportunities that we're seeing just at the moment. So what I will do, I'll bring you over, first of all, we'll just bring you over to the gold chart and we'll take it from there. Okay, so just a quick check-in that you can hear me okay. Yep, fantastic. You can also see the presentation okay as well. Super. Okay, good. So we'll have a look. We'll just break it down for you in terms of what we're looking at right now. First of all, we'll have a look at the price of gold. Gold has been an interesting one, primarily because gold yesterday on the close had the highest close that it's had in over 2 months, okay? So gold has rallied significantly from the lows going back to mid-December, where we had the FOMC statement and an increase in interest rates. Subsequently, we have had a rally here just around 6% gain so far. We've actually moved just shy of 1,000 points now. So we've moved from a low of 1,121 US dollars, and in fact today we spiked up to 1,219 before pulling back a little bit over the US session. Gold at this point is struggling with 1,220 US dollars per ounce. And we're having a few sound issues today. Right, so I'll just bring you back to my presentation. Hold on 1 second whilst we bring you back to the charts. Okay, guys, so we are back on the gold chart. Just a quick check-in again. Yeah, you can hear me okay. Okay, fantastic. Good. So just coming back to gold at the moment. So the main question that we're getting right now is the next level to get into this market. So that has been the most frequent question. So this answer is twofold. You want to look at a breakout opportunity, and you can see very clearly actually at the moment it's coming up against very strong resistance, which is sitting just at 1,220 US dollars per ounce. Essentially, that is the next major zone that gold needs to break through at the moment. Now you can see these arrows at the moment, which is showing the consolidation zone, which gold is stuck within right now. So essentially, for a binary trade, I would be interested in the price to be higher if we get a break of 1,220 US dollars per ounce. That is where we've got overhead resistance. We've tested the level on 4 occasions now, and the price of gold has been unable to break above that level. If it can break above that level, first level of resistance is 1,230, 1,230 US dollars per ounce. The next major overhead level I would look at beyond that is 1,250 US dollars on a breakout above 1,220. So that is an important level. So for those of you who might be monitoring the chart, you're looking for the next trade opportunity, you want to look for a breakout, whether you're setting up alerts on your platform, however you are just getting prepped for the next move here on gold, you want to be aware of that zone. On the flip side, of course, we've had a lot of questions about any potential corrections here on gold. What could we expect for a pullback? Now, for a pullback at the moment, I would be looking for bounces, and you can see here we've got the 50-day moving average, the 21-day moving average, and also the 23.6 Fibonacci retracement level, which is sitting at the moment at 1,180 US dollars per ounce. You've got a monthly pivot just above that level as well. So between 1180 to 1185, any retracements back to that zone, I would look for confirmation that the price is being supported. And if we do pull back to that level and then we get a bounce, we form a rejection candle, we consolidate, we pause, I would look at that as the next opportunity to add. It's been quite rare here in the sense that the gold rally that we've had now over 4 weeks of consecutive gains has only seen very shallow pullbacks. So therefore, any subsequent pullbacks here, if we do get a corrected pullback, I will be looking at this point for a buying opportunity at that zone between 1180 to 1195, providing that level gets supported. So if we just get a natural rotation lower within this bull market, within this bull run that we've had so far in 2017. You get a pullback, that gets supported, comes back down, revisits the 50 MA, that could then into the next leg up higher. So look at as value zone at the moment, have a look at that level, and also for additional breakout opportunities, I would look for a break of 1,120 US dollars. So that is really the key levels that you want to have on your radar at the moment for gold. And gold is one of the most heavily traded out of the metals here. Of course, which you do want to have on the radar at the moment, is going to be palladium. And palladium has today again broken out to 18-month highs. Palladium is up now over 18% in 2017. It's been an incredible run. And what is great about the binary.com platform is that you don't need a stop loss. You don't need to take profit. All you actually need to get correct is the price to be higher or lower, and specify the specific time zone for the price to be higher or lower. So you can see here at the moment, especially weekly trades right now are working well on palladium. We identified the potential for a bull flag formation just last week, which is exactly what we're seeing here. We saw a 10% move on palladium in the first week and a half of 2017. We had a temporary pullback over a week and a half, which developed into a bull flag formation. And this has been perfect in the sort of breakout that you would expect from bull flag, the way that we've broken out from resistance, we've followed through, we've closed above now the highs from 2016 here as well, and we're now at 18-month highs. We are moved back up to 791 US dollars per ounce. The next major level will be psychological resistance at 800 US dollars here. But palladium, have this on your radar. Pullbacks again are to be treated as buying opportunities on this market. Also, platinum is worth having on your radar. Platinum again managed to break out to the upside today. Decent follow through, produced OG candle, indecision candle yesterday. Interestingly, we've hit that psychological resistance level, a major round number, 1,000 US dollars an ounce for platinum. So we've seen another pop to the upside here. And if we continue to see follow through for platinum and palladium, broadly speaking, we often get additional follow through also in silver and gold, although it's not always the same day. Sometimes we can lag. Palladium was interesting in that palladium really got going and rallied over 700 points in the first 3 days of breaking out from its major overhead resistance zones. Let me just show you that. And then we saw gold actually follow through about a week later. So we consolidated over the month of December. We formed a V-shaped reversal pattern, actually a perfect V-shaped reversal pattern here for palladium. Continue to consolidate at above the neckline just earlier in the month of January. Once we broke above this major neckline, this was the move that we've had, significant move over 3 or 4 days here. Then we paused, pulled back and got ready for the next leg up. Why is that important? Why am I saying that? I'm saying that because palladium, again, it seems to be leading the metals. So if palladium does follow through, it's breaking out to 18-month highs. If it subsequently goes on to close around this level, the highest level in 18 months, you could look at then additional follow through for silver, platinum and palladium. Broadly speaking, they're not industrial metals. Silver is, platinum and palladium are precious metals, so they won't move in exactly the same way, but broadly speaking, the precious metals and the base metals move within the same direction. They're dependent on the US dollar as to whether they will gain or not. What that means is if we've got US dollar strength, it puts pressure on gold, silver, platinum, palladium, priced in US dollars. If you've got US dollar weakness, then you often see breakouts to the upside in metals which are priced in US dollars. So US dollar weakness means that you'll get strength in gold, silver, platinum, palladium, other agricultural commodities as well. So definitely be aware of this. Palladium, the best performing commodity of 2017. You want to be able to trade this. You want to be monitoring this. You can trade it on binary.com. Look at additional breakouts of buying opportunities here. So what I would look at here is move back towards 800 US dollars per ounce for palladium. It's been a really good run up so far this year. And any additional breakouts to be taken as buying opportunities. Next overhead major level of resistance is at 825 US dollars per ounce. Okay. And also just going over to silver as well. Silver is noteworthy right now. Silver has essentially moved all the way from the lower end of the trend channel. We bottomed out mid-December statement as expected. We've had the January effect rally, which a lot of you who caught our session earlier on in the month, the training on the January effect has played out perfectly. Well done to everybody who capitalized on that. You made sure that you had plan for the month of January, you've been able to take advantage of the January effects. Essentially, silver has done expected. It's moved all the way back up to the upper end of the channel. It is a bit unfortunate short term right now. It probably needs to pause before it can really continue to go higher here. Might have another corrective pullback back down towards 16 and around 60 cents per ounce here before it can go higher, or it will just consolidate at this zone before it can break out above approximately $17.30 per ounce here. So I would watch silver to overbought. We have managed to close above the 50-day moving average for over a week and a half now. We broke above the 50-day moving average last week, then we retested it, and then we subsequently continued to follow through and hold above that zone. So we could start to build a stronger base here. So it is also worth having on your radar as well. Finally, oil. Oil's been an interesting one. Oil really continues to consolidate. I am expecting lower prices here for oil. So far, oil is really chopping up and down. We've had 3 days now. Looks like today could be another day. In fact, 2 days in a row, using inside candles, which are developing, which is where you have the price structure is inside the previous candle. The body of the candle, as you can see at the moment, where we've developed quite a tight range for oil. Oil normally day to day moves approximately 250 to 300 points per day. If you look at the range on oil today, it's been very tight, only about an 80-point range, which is unusual. And you can also, for those of you who are just tracking this and able to draw in your channels, just make sure you are aware of this pennant formation development at the moment. So typically when we see oil develop a pennant like that, it will have a breakout either to the upside or the downside. We favor a downside breakout. I'm targeting at the moment the 50-day moving average for a sell short, which is a moving target because the 50 MA continues to go higher due to the breakout that we saw on OPEC at the end of November into December, the follow through where we saw over a 10% move in 1 day, 15% move in 1 week. Oil's failed to close above $55 per barrel. It also hasn't broken back below $50 per barrel. Very tight range at the moment, but ultimately it is rolling over. If you go to higher time frames here, you'll see where it's struggling with this overhead major resistance channel, and we're just looking for a breakdown in price. It might be that it spikes high, continues to consolidate, but ultimately we're looking for oil to roll over here. It might not occur that we really get this significant breakdown for a few more days. It depends whether we can get a break out of this pennant formation in the next couple of days. We've got oil inventories tomorrow, which usually does give some short-term direction. Essentially, these arrows here on my chart just point out to major levels that if we break above the overhead resistance zone here, which is roughly about 53, so the weekly highs, and also Thursday, Friday's highs from last week. If we break above those highs with short-term momentum, we'll probably take this price back towards 54 to 54.50 per barrel. If we break below support at 51.70, we'll likely revisit the 50-day moving average and also the monthly pivot around $50.75 a barrel. So I would continue also to watch oil. We are just really consolidating right now, but a breakout from those zones, either a breakout of resistance or a breakdown from support, is likely to lead to the next major move here, okay? So just for a summary, particularly for those of you who joined us a little bit later in the session, if you missed out on some of the audio, gold, first of all, I'm looking for buying opportunities for a break above 1,220 for the price to be higher. You can look at that either based on several hours, depending on what point of time that breaks out from resistance, or for the trade to be higher, for example, over 24-hour period or 48-hour period. If it continues to break down, set alerts for around the 1180 to 1185 zone. That will be important level of support. Also, you've got a strong underlying channel here, which you can just draw underneath gold, which essentially would sit around about 1200. So if we continue to hold above 1200 to 1205 also represents an area of value on retracements at the moment. But you can see gold is just really struggling a little bit with overhead resistance, but it only takes a news item or some breaking news, which would just cause a very, very quick breakout higher. Only needs to actually break out another 100 points or $10 move for gold in order to break through resistance. It could do that within an hour. In fact, sometimes gold can do that within half an hour. So it's just worth being aware of that. And I would look out for those trading opportunities over the next few days here. So just have your alerts set and ready, or be in front of the charts. Again, palladium, I see more upside on this market. Very impressive run, best performing commodity of 2017 so far. As we've kind of built up that case throughout today's session, guys, we talked about commodities the opportunities on these markets, what we see over this year. I generally don't want you to miss out on the money-making opportunities that you've got this year. January has been a very profitable and lucrative month for us at the Gold and Silver Club. You really don't want to miss out on what's to come now. Now Donald Trump is in office. This is going to cause some tremendous opportunities in the markets. And quite frankly, if you're not making money at the moment, you definitely should be. So I would certainly suggest that you want to stay on to the end of today's session and get in touch with us if you would like to find out more on how to become a member of the Gold and Silver Club. With that said, I'll just talk you through our top trades over the last week. Our portfolio performance, trading performance update using our exclusive research-driven strategies. Our top trades have included WTI crude oil, where we went for a sell for the price to be lower just last week. Very quick trade for the price to be lower by the close, and you can see that that's just broken down really well once we broke back below $52.75 a barrel. We've also had an opportunity, of course, to continue to stagger into gold. At the beginning of the month on the January effect, we took several positions with staggered closes, so you can have several trades on at the same or similar entries and just stagger the closes on those so that you're exiting out the positions as the price continues to rally, which has worked out perfectly here. So gold so far has continued to deliver over January. It's rallied over 700 points since the price that we got into the position. And also we're taking advantage of a short-term sell on platinum. It broke down after it got into quite an overbought condition last week off the back of comments from the Federal Reserve. We also saw gold and palladium pull back, but platinum provided us with a very clear rejection candle, quick sell short opportunity using binary. Again, don't need a stop loss to take profit, just need the price to close lower over a given time frame. And we've just entered into the trade for the price to be lower, coming out below 669 there on platinum. So again, if you would like access to highly profitable live trade ideas shared with you, ready to implement or instant results, all you need to do is go across to www.joingold.com. I'll just into the chat there for you as well. Okay, and with that, once you make an application, we will get an interview ASAP. It is worth noting as well, if you do, when you make an application to the Gold and Silver Club, please do mention where you have from. So we have a special for those clients for binary.com who are making applications to the Gold and Silver Club. We get a lot of applications to the Gold and Silver Club, and if you would like a special bonus that we provide to applicants coming through binary.com, please make sure you mention that in the chat. So when you make application, just mention that you come via binary. Even if you watch a YouTube recording of this, the recording which is sent out via binary, or even if you're live on the session, sure you mention that. So with that said, who is the live trading room for and who will this benefit? Okay, so whether you're a new trader, so it might be that you are very new to the markets, you can see there's opportunities, but you want to learn really how to make the most of the opportunities over 2017. We've got a lot coming up over the next few months. And if you are a new trader, you're just looking to build up your understanding of the markets, fast track your results, do make sure you get in touch with us. Also, if you're an experienced trader, but you might be experienced in Forex or equities or have a little bit of experience with gold or oil, but haven't achieved any consistency, or you're not making the sort of gains that you want, then the private members live trading room is definitely for you. That includes the following. So you can watch the Gold and Silver Club expert traders analyze markets right in front of you, picking out highly profitable trade stuff, sharing exact details of entry, exit points, profit, stop loss targets, walk you through live trade ideas ready to implement for instant results. You also get notifications by email and SMS, real-time notifications which alert you when to enter a trade. All notifications include exact details where to enter, exit, and place a stop loss, and those notifications are sent out in advance notice to make sure you get plenty of time to get into a position. And also you get our commodity research and market insights. So you get exclusive access to our proprietary trading research and market insights to help boost the win rate and ensure you're getting on the right side of every trade. So I think research is really there to give you the ultimate edge in the markets and track your results. Private members live trading room includes exclusive weekly live trading room webinars, live trades ready to implement for instant results, real-time notifications sent out by email and SMS so you're not missing out on profitable trades, exact details of where to enter, exit, place a stop loss, a weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and sites to give you the ultimate edge in the market. So to make an application, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, so with that said, guys, have a fantastic week, good trading. We definitely look forward to seeing you on the next one, and of course, very much look forward to hearing from those of you who will be making an application and joining us at the Gold and Silver Club. Okay, guys, take care. We'll speak to you real soon. Thanks, everybody. All the best. Bye-bye.